Welcome, dear traders. This is the latest review of the US stock market by InstaForex. The US market has had a holiday sell-off instead of the awaited Santa Claus rally. The only hope for the equities lied in the US labor market data. The sell-off continued on a Wednesday, with the main indexes dropping significantly, matching our bearish outlook. The Dow Jones Industrial Average lost 365 pips or 1.1%. The NASDAQ dropped by 1.35%, hitting the yellow low. The S&P500 declined by 1.2% to lower boundary of the trading range at 3,783 points. During today's pre-market trading, index futures added from 0.2 to 0.7% after remaining in negative territory early on. Today, the S&P 500 is expected to trade in the intraday corridor between 3,780 and 3,890 points. Energy and the tech stock continue to put pressure on the stock market. Earlier, the NASDAQ closed at 10,213 points, its lowest level since July 2020 and the beginning of the bear market in November 2021. All 11 components on the S&P 500 went down on Wednesday. Energy lost 2.2% as concerns over demand in China affected oil prices. As the sharp rise in infections coincides with the easing of quarantine measures in China, investors are worried that the outbreak will impact numerous industries and economic sectors just like in 2020. Lower inflation data sparked increased hopes of a smaller Fed rate hike. However, a tight labor market and a resilient US economy have raised concerns that interest rates could remain high longer than previously expected. Markets are currently pricing in a 69% probability of a 25 basis point rate hike at the Fed policy meeting in February. Interest rates are expected to peak at 4.94% in the first half of 2023. Shares of Tesla rose by 3.3% in erratic trading, a day after hitting the lowest level in more than 2 years. Since the beginning of 2022, Tesla stock slid down by almost 69%. Shares of Southwest Airlines lost 5.2% intraday after the company was criticized by U.S. authorities for canceling thousands of flights. Apple, Alphabet and Amazon posted losses from 1.5% to 3.1%. The S&P 500 is down 20% year-to-date, on a track for its biggest annual loss since the 2008 financial crisis. On a Thursday, investors began buying equities at their lows, allowing the tech sector to recover and giving hope for a stock index rebound. Major stocks such as Apple, Alphabet, Amazon, Microsoft, Meta and Tesla added from 0.2% to 4.9%. At the same time, initial jobless claims data in the US matched market expectations. The number of jobless claims increased by 9,000 to 225,000, and this could be a positive factor for the stock market. However, continuing claims jumped by 24,000 to 1,710,000, exceeding expectations. The data have signaled that the labor market remains quite strong. However, the reports may help to increase risk appetite in the short term. It all depends on how much optimism investors have for the next year. USDX has retreated to 104.10 from the high of 104.50. It hit on a Wednesday as the equities rebounded. Today, the intraday corridor for the index is defined between 103.70 and 104.30. The dollar fell slightly on Thursday after long-term U.S. Treasury yields rose the day before. Uncertainty about the global economic outlook, along with the growing fears of a recession in the United States, have pushed down the yield of 2-year Treasury notes, which normally move in line with the interest rate expectations. After China lifted their quarantine rule for incoming travelers starting on January 8, countries such as the US, Japan, and India said they would require tests from Chinese travelers. This eased the pressure on the US dollar. The recovery of demand and tourism is good for the global economy but could drive global inflation upwards. Amid overall uncertainty, the strength of the US dollar remains undoubted, however. The Canadian dollar has found strong support and pessimistic sentiment regarding the US dollar. The USD CAD pair decreased by 0.2% to 1.3578 as the loonie recouped some of its losses. The trading corridor for the pair is seen between 1.3520 and 1.3620. Oil prices slipped on a Thursday as a surge in infections in China dampened hopes that fuel demand would increase in the world's largest importer of crude oil. Brent crude futures for February fell by 0.8% to $83.29 per barrel. Looking ahead to 2023, oil prices might recover depending on the pace of China's reopening and whether market participants have assessed all the associated risks. TC Energy has announced it was working to restart a portion of the Keystone pipeline that had been closed due to a leak this month. At the same time, it's expected that the U.S. crude inventories will decline, and the inventory data is due later today. The cryptocurrency market today also went up alongside risky assets. Bitcoin climbed above 16,600 intraday, while altcoins were mixed. Ethereum and Litecoin added 1.2% and 0.4% respectively. Solana and Ripple slid down by 3.3% and 3.9% respectively. Solana, which was earlier backed by Sam Bankman-Fried, continues to plummet. It has already lost almost 96% of its value this year. Sam Bankman-Fried, who is expected to plead guilty next week for defrauding investors and stealing billions of dollars from FTX, has often praised Solana. FTX and Alameda held Solana tokens on their balance sheets, and although Solana is not directly related to FTX, it came under severe pressure due to having ties with it. In the meantime, Bitcoin is set to advance today, and the outlook for the asset remains unchanged. If the cryptocurrency drops below 16,600, then the asset could fall to 16,200. Its upside targets are $16,800 and $17,200. And this is how our analysts see the situation in the US market on a Tuesday. We hope that you will find the perfect asset for you. The InstaForex team wishes you the best of luck, and until next time, see you tomorrow.